Welcome to the deep dive. Today, we're embarking on a deep dive into the 2025 July stock market outlook. Our primary source, the well-regarded 2025 Stock Traders Almanac. It's known for its focus on seasonal patterns, historical data. Our mission for you, our listener, is pretty straightforward. Extract the core insights, shine a light on potential opportunities history points to, and, crucially, flag those areas where maybe a little caution is needed.
Exactly. We've really distilled decades of market behavior, digging through the Almanac's analysis to give you a solid, historically grounded picture of what July 2025 might look like. It's less about a crystal ball, more about understanding the market's rhythm, those sort of predictable currents.
I like that, the rhythm of the market. Okay, let's unpack this then. Looking at these patterns, what's the general historical vibe for July? Does it kick off Q3 strongly, or is it usually more uncertain?
Historically, July really stands out. It's been consistently the strongest month of the third quarter for the big indices.
All of them.
Yeah, S&P 500, the Dow Jones Industrial Average, NASDAQ, even the Russell 2000. They've all shown, on average, pretty positive performance in July. Often the best month of that quarter, actually.
That's quite something for a summer month. So what makes July, especially early July, such a strong period historically? Is there a tangible reason, or just one of those market quirks?
Oh, it's definitely not just a quirk. There's a pretty practical driver. A big factor is the predictable inflow of funds. You see, right after the second quarter ends in June, a lot of institutional money, think big retirement funds, pension funds, mutual funds, gets reallocated.
Right, quarterly shuffle.
Exactly. And this fresh capital flows into the market, often giving it a noticeable push, particularly right at the start of the new month and quarter, like a scheduled injection of cash almost.
Yeah. So not just abstract history, but actual money moving from the big players. That makes it feel more solid. Speaking of right at the start, do we have specific data for the very first trading days, like day 1 of July?
Absolutely. And it's pretty remarkable. The first trading day of July for the S&P 500, it's been up 31 of the last 35 years.
Wow. 31 out of 35.
Yeah, that's an 89% win rate, basically.
Right.
With an average gain of about 0.5% just for that single day.
Okay.
And the Dow sees an average gain of 0.27%, NASDAQ 0.28% on that first day. And this initial burst, it often carries through the first couple of weeks. A pretty reliable start to the quarter, historically.
That's fascinating. But here's another layer. Thinking about 2025, it's a post-presidential election year. Does that change the July picture at all? Or is it just another year in the data?
That's a really critical point. Yes, it's a huge factor. The Almanac really highlights this. Historically, July in a post-election year is exceptionally strong, even stronger than its usual performance.
Really? How much stronger?
It's actually ranked number 1. The best month for returns in post-election years across the board, Dow, S&P, NASDAQ.
Number 1.
Wow.
Yep.
The Dow was up 15 times out of 18 post-election Julys. S&P up 12 of 18, NASDAQ up 11 of 13. It's like a powerful historical tailwind. Maybe, the market breathes a sigh of relief after the election uncertainty passes.
Okay, that's a pretty compelling case for early July strength then. So putting it all together, the fund flows, that strong first day, and this post-election year kicker. What does that translate to for average monthly returns in July?
Well, a typical July already looks decent. Dow usually up about 1.4%, S&P 500 around 1.3%, NASDAQ 0.9%, Russell 2000 about 1.2%. But here's the striking part. In post-election years, those averages jump. The Dow's average gain leaps to 2.1%. S&P averages 2.2%. And NASDAQ, which often lags a bit in typical Julys, surges to an average of 3.2% in post-election Julys.
A 3.2% average for NASDAQ.
Yeah, it really underscores the historical edge and, the potential for a bullish July in 2025 based purely on these patterns.
That all sounds pretty positive for July. Almost makes it seem like, clear skies ahead for investors. But we all know it's rarely that simple, right? Are there points within July where things tend to get a bit trickier? Some choppy waters.
Indeed, absolutely. While early July looks strong historically, the market often hits some turbulence, maybe softens a bit, after the July 4th holiday.
The Independence Day effect.
Seems like it. It's a recurring pattern. Maybe traders take their foot off the gas, or maybe just summer holiday patterns really kick in.
Okay. Let's get really granular for our listener. Any specific days of the week in July to be more mindful of? Or maybe days that tend to be better? It's not just the weeks, but the daily rhythm too, right?
Good question. Yeah, the data since '89 shows some interesting daily habits. Mondays and Fridays. Actually, relatively weaker for the Dow.
Mondays and Fridays.
Yeah, especially in bear market years like,
Yeah.
01, 02, 08, 09, even 2022. It's almost like the market takes a breath then.
Interesting.
Tuesdays, Wednesdays, on the other hand, have been consistently stronger. Just to give you a sense, since 1989, Mondays, Tuesdays, and Wednesdays combined added over 27,000 Dow points.
Okay.
Thursdays and Fridays combined, only about 10,000 points. There's even that old trading adage, right? Don't sell stocks on Monday or Friday.
Yeah.
It kind of shows how ingrained these patterns can feel.
Huh. That's a practical takeaway. Okay, so general trends. What about specific indices? Any particular one that stands out with maybe a warning sign for July? Something that bucks the positive trend, especially with market rotations lately.
This is a crucial one, yes. It concerns NASDAQ. While other indices might be enjoying that July strength, July actually marks the start of what the Almanac calls NASDAQ's worst 4 months of the year.
Worst 4, starting in July.
Yep, July through October. It's not just a historical quirk. It often reflects a shift away from high-growth tech as summer wears on. Could be earnings cycles, rotation into other sectors, lower volume.
So a heads up for tech investors.
Definitely, especially tech-heavy investors. Need to be mindful of potentially increased risk, softer performance, maybe even negative returns in the second half of the month for NASDAQ. We saw NASDAQ have some really rough Julys during past bear markets like the early 2000s. It really lived up to that worst month's label then.
Okay, so let's bring this all together.
If you're trading actively, be nimble. Don't expect a straight shot up. And critically, if you're heavily weighted in tech or focused on NASDAQ, remember it's entering its historically weaker phase. That calls for extra vigilance.
Maybe reevaluate, diversify a bit.
Could be prudent, yeah. Especially if tech has had a strong run leading into July. Maybe look at more defensive sectors or things that tend to do better historically during that specific July-October stretch.
So what stands out to you from all this? How can you apply this knowledge personally? It's not just about the stats, is it? It's blending this historical view with your own goals, your risk tolerance, and, what's actually happening in the economy now.
That's the real art, isn't it? Balancing the past patterns with the present realities.